The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the February 11th wonderful Wednesday edition of today's Opening Bell on the Trader's Edge. I'm your host, Stevie Perseverance Rhodes. And I believe that we should always be pioneers of our future versus prisoners of our past. Hope everyone out there had a terrific Tuesday. Let's make sure that you and I, that we do all that we can do to have an extraordinary Wednesday. And of course, the easiest way to do that is to always remember that life happens for us, not to us. We make that little 2x4 exchange out there. It means that you and I can find the gift in every set of circumstance that life is going to throw at us. And that's the job of life. That's the job of the universe, to always throw those set of circumstances, because all we got to do is just simply stare at them in the face, step up, find the gift, focus on the gifts, folks. If you do that, life will be good. One of the gifts for me each day is the mere fact of your presence here. And I'm grateful for that presence. Of course, I'm here to serve you. Feel free to give me a call if I can assist you. You can reach out to us at 877-927-6648. You can even call us internationally. You can do that by dialing in at 727-445-1044. This is Wonderful Wednesday. Of course, none other than Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got Dow Futures trading off about 34 points. They're trading out at 17,758. S&P futures down 2.5 points, trading at 2,059. Russell 2000 back a couple of points at 1197. Looks like NASDAQ futures up 1 point, trading at 42.77. The king of beers, King Dollars, basically flat up a nickel right now, trade out at 95.90. You've got gold up $2, silver up 5 cents, light sweet crude back 46 cents, trading at 49.56. Natural gas on the move this morning, up 16 pennies. That low, that bottom that we were expecting, looks like that has come in. We saw that seventh wave pattern to the downside. I think we looked at that on Friday. Maybe it was on Monday out there. And we use that with our timing tool, the timing tool saying that the bottom is due around February 14th. Well, heck, that's Saturday. Today is Wednesday. That works inside of my time frames out there. Now, that's a bottom that should be in for about 5, 7, 8, 9, 10 trading sessions before that gets sucker punched at least another time out there. We've got, let's see, what else do we have? Let's go take a quick peek around the globe out here, see what we have going on out there. If we look over in, let's start here by looking and let's go take a look at Germany. Let's go take a look at the DAX. It's basically flat. It's down to about 3 pennies right now. It's trading at 10,748. Now, this thing here, the DAX, is broken out of that upside consolidation pattern. If I pull this back here, you'll see it. Let's see how long this consolidation was actually in place here. This consolidation was in place. I ought to just go ahead and note that. So that was in September of 2013. This broke out of it back here in January of 2015. So what are we looking at? September, that's 15 month consolidation. I'm going to go ahead and change that just simply. So 1,675 point, 15 month consolidation pattern that it broke out of. Now, when you break out of a consolidation pattern, your move is equal to or greater than that consolidation. It's called a measured move. Now we know we've got a large A to B equals CD to the upside, or an A to B equals CD pattern that had completed the one-to-one, but it's going to do more than that. The upside target inside of the DAX is 11,708. So far, the high that we've seen inside the DAX has been 10,984. So you got about another, 800-point move, 800-point move left inside of the DAX out here. Now, that doesn't mean that it's going to do it overnight. That doesn't mean there's not going to be a retracement. But what we can say is that unless the DAX gets back underneath 10,033, it more likely is going to, in fact, when I say more likely, it's going to move up to that 11,705 unless it gets back inside the consolidation range. If it doesn't, you got to be looking for upside moves inside of the the DAX, and it's just a matter of when and where. If we go take a look at that FTSE, we've talked about the consolidation pattern that's inside the FTSE. That's a 13-month consolidation that it has been in. That's about an 800-point consolidation, 789 points to be exact. That consolidation from about the 6,086 level to 6,875. It's attempted to get through there on several occasions. Right now, it's trading out at 67.91, really just consolidating at these highs. It's just winding that rubber band around its finger out here. And when it does break above, 68.75, if it does that with conviction, what this would be signaling to you and I is a move to 76.64. Does it mean that you can't see further retracements in here? Yeah, absolutely you can. But what you want to be watching for inside of the FTSE, what all of us want to be watching for here, is any break above 76.64. It's not there. I'm sorry, above a break up. Yeah, you want to see that for sure, but a break above 68.75, because that will be the signal that it is. Now, I don't expect that we see that take place until, I'm going to say at this stage, probably not until the early part of March. We're only at February the 11th out here. So I don't expect that. I'm not talking to you. I'm just giving you the idea. And you need to know, look, how do you know where you're going to unless you know where you've come from out there? And you got to be able to do some planning. That's really what trading and investing is all about. Do the work ahead of time, and then you can go ahead and plan things out. So that's the message of the FTSE. If we go take a look at the Nikkei, down 59 points last night, about 1/3%. What do we have going on inside of the Nikkei? Nikkei's got a nice large A to B equals CD projection. That A to B, it's got several of them, quite frankly. It's got two. Let's just put it like that. It's got two price projections. One takes you to 19,739. The actual high that we've seen so far has been 18,030. That took place here on December the 8th out there. So it's got an A to B equals CD. It's just kind of been churning around up here, but it wants to move up to the 19,739. It's got another A to B equals CD pattern that'll take you up to the 20,094. You're trading at, or you closed out at 17,652. So longer range, that is the price level of where the Nikkei wants to move to. If we go take a look at the Hang Seng out here, the Hang Seng down 213 points off about 0.9% last night. Let me see, do we have any pattern already drawn in here inside of the Hang Seng? Why, of course we do. Let me see, what's that price pattern out here? We've got an A to B equals CD. Let's just move that to the upside. That A to B equals CD pattern says that its long-range goal is to get up to the 25,822 level. So far, we've seen a high of 25,356. That'll be your one-to-one A to B equals CD, I believe, 25,822. So that's where it wants to head to. We got all these markets here kind of moving in a nice little bit of unison, so to speak. Let's go take a look at the Shanghai out here. The Shanghai, I believe the Shanghai, when is the Chinese New Year? Is the Chinese New Year, about the Hang Seng and the Shanghai will be closed, but the Chinese New Year should be getting ready to start here soon. I should have looked that up. It's got to be within the next couple of days. Hey, nothing more cool than being over in China, being over in Hong Kong during the Chinese New Year. I remember the first time that I was over there, I wasn't even paying attention to the lunar calendar, what was going on. I had some other issues that I was dealing with when I was over in Hong Kong, staying at this extraordinary hotel over there. It was a story where I actually had to break out of mainland China. True story, absolute true story. It was as if I was, at that time. This was back in the 90s, and it was. I don't want to get too off. I try not to get too off, but it makes for at that stage of the game I was for about 24 to 48 hours. I was pretty scared. But had a lot of fear going through me, and but I was able to make my way out of there. Remember getting to this hotel in Hong Kong, waking up the next morning. It happened to be the Chinese New Year, and they were downstairs, with the whole big long dragon thing. It was pretty cool to be there. In any event, I think that's coming up here soon. Maybe somebody in the den can tell me when that actually starts. But that's not what we were talking about. We were talking. I don't want to digress because it actually kind of gets me into a negative mode, and I actually have to go back and remember that condition out there. But it was like being in my own spy thriller out there. No kidding. I was going to say something else, but four-letter word, but we'll just go with the no kidding side of it. Now, we take a look at the Hang Seng out here. I'm sorry, the Shanghai. We're taking a look at the Shanghai. At 36.55, we pointed this out. That's really significant resistance level. By the way, it closed out at 33.08. 36.55, that's a resistance that goes back to 2008. If we take a look at retracements from its 2007 high, and I'm not doing that here right now. I'm just explaining to you the levels that we're looking at. But at 35.37, and we're trading right now. And we've seen price move up into that 35, 37 level. That's acted as resistance. You may say, hey, what stopped it there? What stopped it there was just simply the natural elevator. That elevator was the floor. That first floor in any kind of a move is your 0.382 retracement. In this case here, it was from the 2007 high down to the lows that were put in. I'm not sure when the lows were put in, 2000, maybe it may have been 2013. But in any event, from the high to the low, 35, 37 is your 0.382 retracements. That's why price just kind of stopped in that level. Now it's got to make its way up to 36.55. When it breaks above 36.55, then you're looking at one heck of a move because it'll have broken above its floor, its 0.382 floor. It'll have broken above a 2008 resistance level that ought to become support. That says 36.55. And it ought to go ahead and make its way up to the 46.42 is the long range level. Now, I expect these markets to kind of work in tandem here, and so I don't really think the bulk of that move really begins until the March timeframe as well. So we've got a few weeks before we really see that thing truly kick in. So that covers those 5 major markets. Now let's go take a look at ours. Let's go take a look at the daily charts as we have the past several days. Let's start off by taking a look at the S&P futures. What do we know about the S&P futures contract? Trading out at that 2059 level. We pointed out that 2062 is its a point of resistance. That happens to be the high from January 9th out here. We're still trading around that level. It does look like to me, I don't see any reason for it to not be able to clear that hurdle and then get all the way back up to its swing point high from December 29th, 2088. Depending on the kind of volume that it has as it gets to that hurdle, if it can clear that hurdle, that high jump out there, then you've got a fairly large move to the upside. I don't expect we're going to see all of that take place between now and really the next week. I expect we're going to see that level get hit, and then we're going to fail. It's going to, when I say fail, we'll see price get back into the consolidation, pull back. I don't know if it's just going to continue the consolidation. That much of it I don't know. But then we see a big move that takes place in March as well. That's what's going on inside of the S&P futures. So for those of you that I just simply don't like these consolidating patterns out here, hey, start really looking at stock. This could be 2015. Right now, the message is we're really off to a stock pickers market versus just playing. Although the consolidation pattern is not too bad. You're looking 1965 to 2088. That's not too bad out here. Just buy the bottom, sell the top. We're not up to the top just yet. That's at the 2088 level. And I suspect that we will see the S&P futures get up there. If we go take a look at the NASDAQ out here, the NASDAQ, it's got to clear its resistance. That's that little doji in the window, Stevie's window. That's the January 23rd high at 42.86. Once we get above that, then 43.42 becomes its next target. If we go take a look at the Dow futures out here, the Dow futures, they're trading down just a bit. They're trading at 17,756. It's got resistance at 17,864. We clear that, and then it's headed to 18,051. Too much energy for you? Hey, that's without even taking a sip of the 5-hour energy drink for you. You gotta love it. This is Steve Rhodes. This is TFNN. We'll be right back for you. We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of TigerTV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of TigerTV, then visit TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Hey, 8 hours from now, there's going to be an extraordinary workshop that I want you to attend. Here's the thing. Over the course of, let me just describe to you. Over the course of the last 84 years, folks, there's only been 15 times that the market experienced more volatile January than what you and I just went through. That means 82% of the time, the market has behaved differently. So here's the question. Is that important information? Well, let me put it to you like this. Is the gas gauge in your car an important gauge? Is it an important tool? Can you imagine not knowing whether or not you're going to run out of gas? I mean, how many extra stops do you think you'd have to make at a gas station? And how about this? God forbid you run out of gas. You ever run out of gas, been on the side of the road? I can tell you from personal experience, sometimes even if that gas gauge doesn't work, that can happen. That is no fun out there. And so when it comes to trading and investing, it's really the same thing. If we trade without important tools, such as knowing, what it meant the other 15 times that we experienced in January, that was more volatile than just what we went through out here, well, you just might find yourself stranded on the side of the investment road with nobody coming to pick you up. You don't want to do that, and you don't need to do that. So tonight at 5:30, I'm going to explain to you what all that volatility means. But more important, I'm going to show you whether you're a trader, whether you're an investor, how to read the market with a set of tools that very few traders even know about. So these are not going to be tools that you can find on any type of trading platform out there, but they are going to be tools that I'm going to show you how to use. I'm going to show you how you can get access to that. It doesn't cost you anything in order to be able to do that. And for example, let me give you an idea. January 28th, and I'll go back and we'll take a look at the S&P 500. But basically, the S&P closed down 27 points. And there were a lot of traders, that figured that the market was picking up steam, that it was moving to the downside. In fact, many people, they might have listened to the show. They said, I'm going to go ahead and get in on this action here. The market's falling apart. I'm going to go ahead and get in the short side of that. And they might have even done it after hours. I don't know when they would have done it, but I know a lot of people were doing that. When you do the right thing at the wrong time, it never leads to a good result. And what I'm going to show you is that would have absolutely been the wrong time to do it. I'm going to show you with a 90% probability why that would have been the wrong time to do that. So how would you like to have an indicator that would stop you from doing that 90% of the time? Most people would say yes. If you'd like to do that, then just come on over to the homepage at TFNN.com and sign up for the workshop. It's easy to get into. It's free. That doesn't mean that there's no value in what you're going to be receiving out here. Look, here's the deal. If growth is important to you, if learning is important to you, then this is going to be a once-in-a-lifetime workshop. I'm not going to do this again. The only other time that I will cover this will be during an absolutely paid workshop out there. I can promise you that. And here's the expression. You know this expression, right? If you're not growing, you're what? Yeah, if you're not growing, you're dying. So you want to come over to the workshop. If you're a person that feels like you're at the end of your rope, I know there's a lot of people. I get emails from folks. They feel like, hey, I'm at the end of my rope when it comes to trading and investing. And I say it's time to put down that rope. It's time to use my rope out here because my rope is going to let you climb to a level that your rope won't let you climb to. If you're a person that doesn't see the light at the end of your tunnel, you know what? It's time to get out of that tunnel. It's time to join me on the bridge. Heck, the view is way better on a bridge than it is in a tunnel anyway. Can you imagine getting stuck inside a tunnel? Just that smell, and that never sounds good to me. If you're a person that thinks that I'm really just giving you a sales pitch out here, we talked about this a little bit yesterday. That's the last thing I'm doing. Am I trying to influence you? Yes, because there is no single greater skill that each of us have to have than being an influencer. If you're a one-man, one-woman army, when it comes to trading and investing like most of us are, you need to be able to influence yourself. If you're just, you're going to work right now, maybe you're at work, just think of the co-workers, your boss, your customers. You need to be able to influence them. When you're going home, you need to be able to influence your spouse, your friends, your family, your kids, your grandkids, you name it. The single greatest skill that you can possess is being an influencer out there. And what we want to do is we want to utilize tools inside the market that allow us to influence with the decisions that we make. And that's really what I'm going to be sharing tonight. So here's the deal. In order to get in, all you got to do is come over to the homepage of TFNN.com and sign up for it. What it also gives you 30 days connection to me. If you have a question, you can reach out to me by phone. I give you my phone number. If you want to reach out to me by Skype, you can reach out to me by Skype. If you want to reach out to me by email, you can do that. So think about having that type of coach at your side for the next 30 days. Come on over to the homepage at TFNN.com. Look, if you can't be there tonight, that's okay, because what we will do is we'll go ahead and put it on your members page. You'll be able to access this for the next 30 days. I promise you that this will be a wonderful time out there. So we get back from this break. We're going to go see how these markets are going to drop, whether they're going to pop. In fact, we'll take a look at the 30-minute chart here for the Dow. It actually made this seventh wave pattern to the downside. That says, hey, the bottom may be in, at least for the open out here. Maybe we see these markets actually pop to the upside. The Dow on the 30-minute chart may have just given us that wonderful seventh inning stretch. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow off 48 points, trading out at 17,820. S&P off 2.5 at 2,066. The composite up 2 points at 47.90. Russell down 1.5 points. To the upside, gold up $2. Silver up 4 pennies. Light sweet crude back 65 cents. Lead the charge. The upside, it's Interexion Holdings up 14%, up about $4. Thoratic Corp, THOR. Thor is up 8%, up $3. Voya Financial, VOYA up 4%. Akamai Technologies up 3.5%. That's up $2. PepsiCo up $2. Lion Gate Entertainment up $1.70. To the downside, you got Marketo, MKTO. That's off 16%, off $5 and change. Pier 1 Imports down $5, down 30%. Holy cow! Pioneer Natural Resources down down $6, down about 3.8%. AOL off about 8% this morning. Tesla down about 1 7/10 off $3. Now, a couple emails coming in here. A question that says, hey, is now the time to get into natural gas? All right, let's go take a look at natural gas. Let's go take a look at that seasonal pattern. We've shown this out here. We went through this in detail just a few days ago, I believe. I can't recall exactly when, but let's take a look at it right now. So here's your slide for natural gas. Here's your seasonal pattern out here. That seasonal pattern shows that lows should be coming in right about now. So the actual low, if I were to take a look at it, the schedule for it is February 14th. We use this as a guideline. What we look for are patterns that come in that work with inside this range. Now, the reason why I'm showing you this chart is because this bounce that we're going to get here, it is going to be a nice, maybe, we'll just use this as a directional versus the depth of any move higher or lower out here. That's really one of the best ways to use it. But what this is, it shows that this thing is going to make a bounce, a move, and then it's going to run out of natural gas. It's going to run out of its own natural gas. Now, that running out of its own natural gas, that's scheduled right around February 25th. Well, figure if this is coming in a few days early, it's the 11th versus the 14th. Of course, the 14th is not a trading session out there. You got a few trading sessions, so maybe it's not the 25th that it peters out. Maybe it's the Peter Pan principle around the 21st, 22nd of April of March before it pulls back. Now, we've put that together with the, and I'm going to go switch over to the continuous contract here just because I have more of the data. So here's the daily. What do we know about the daily? We know on the daily here, it made that seventh wave inning stretch, that seventh inning stretch up pattern out here as it got down to that little G, that little trough G, that Basil Chapman trough G, down on the lows here of, when was this? Was February 6th out here. You made that low. You made a little bit of a higher, but no reversal signal here on the 9th. But yesterday you did. Yesterday you had a nice little bull sash candle. We can see here that's a reversal signal. So you get a reversal signal after that seventh wave to the downside out there. Now you've gotten the signals that, yes, that low that we would be expecting from a seasonal standpoint, that it's in. So now the question becomes, hey, where is it that you go ahead and you try to get long? Well, let's just go take a look at, let's put up the current contract here. For nat gas. Nice. Here's the same. Let's put this on a shorter term time frame out here. I don't know. Let's see what the candles look like on a 30-minute chart out here, the way that this trades. Okay, so let's go see if there's any patterns out here that this thing may be completing. So we see an A to B equals CD pattern for sure. So let's go take a look at that and see how this is doing. This is on the short-term chart. So this is on the 30-minute chart. So our A point's going to be down here, February 9th's low. That's our A point. Our B point is going to be a high that came in yesterday about 12:30, and then it retraces down till about 2 o'clock in the afternoon. Only makes about a 40% retracement. Now, what we can see here is that it's made the 1-to-1 A to B equals CD as it got up to the $2.84 level. Now, this may not be where it stops. I could easily make the case that this ought to run to 289 versus the 284 where you're at. But if this does stop here, and we're starting, let me see if I've got any volume bars out here. Let me do this. Let me see what we've got here volume-wise. Let me take a look at this thing here. Well, here are the spots. We're going to first, the assumption is, and you do have a reversal signal at the 1-to-1 A to B equals CD pattern out here. So it says that, I can make both cases that you could see a retracement here. Ideally, retracements on this that you would be looking at, if you go from the entire A to B equals CD pattern out here, it says right about $2.74 to $2.68. That'd either be your 0.382 or your 0.618 retracement. I like that 2.74. I like that 0.382 retracement here inside of natural gas. The reason I like that is because then what it does is it comes all the way back to this B point here at $2.75. If we take a look at the retracement just of this C to D leg out here, that C to D leg, you get your 0.618 retracement of that right around 274. So the answer is your first place to attempt to buy if we continue to see a bit of a pullback here, and as long as it's not with volume as it's moving down there, it's right around that $2.75 mark, and that's what you would be looking at in order to go ahead and take a long trade. Whether you're trying, I don't know whether the listener is taking a look at the natural gas contract or he's looking at the UNG out there, but that's really how you would gauge any entry into the UNG. You'd go find out what's going on inside the natural gas contract, and that would be the best way to trade it out there. So that covers nat gas, but don't forget it's going to run out of its own gas, it should run out of it if the look. that the seasonal cycle pattern, I've been talking about this for a while out here, and it sure seems to be working. Why would we not pay attention to it? So expect a move up and then expect a pullback right back down, probably to the lows that we just experienced here in February. Then it becomes not till April that you really start to load up the truck, back up the truck, and take long positions inside a natural. Well, we got to wait till we actually get there and see what else is going inside of the Tigers, inside of the market out here. Now, I mentioned in the Dow on the 30-minute chart out here. Let me see what we've got going. So still inside the Dow futures out here. The pattern is in place that suggests that they, at least the short-term bottom has been put. It could be more than a short-term bottom. We got that seventh wave, same thing that we just looked at, only on a different time frame. Right here's a 30-minute chart for the Dow futures. We were just looking at the natural gas contract out here, but these tools work on all time frames. Now, the cool thing about each of those patterns, in the case of natural gas, in the case of the Dow, if you were to go along the Dow, you'd close out your trade with any close below the low that came in here at 8:30 this morning inside the Dow futures. That would be down at a price point to 17,742. We're not there yet. We're trading at 17,781 as long as I don't have any kind of weird delay on my system. Let me just switch over here real quickly. 17,781. Yeah, there we are. Okay, good. So I've got that working. I had to spend some time on that yesterday trying to figure out. I was having delays with a couple of different tools out there, and that will drive you crazy. At least it was driving me crazy. All right, so back in the saddle out here. The Dow's off 53. S&P is down a couple points. Composites up 8 points out here. If we go take a look at the summation indices, let's go take a look at them. We've got everything here is basically in full-blown bullish mode, but we're going to go look at that New York Stock Exchange. It bounced off of that zero line yesterday. Right now, it's trading right slightly just below that zero line as well. But, the struggles here inside of the New York Stock Exchange as I take a look at the summation index, as I take a look at the price oscillator. Yesterday, I showed you that the advanced decline line, it was making all-time highs. It did it like last Monday, last Wednesday. Markets don't end like that. This says the New York Stock Exchange wants to get back up to its highs. I suspect that's what we're going to see take place between now and next week. Sometime in the middle of next week. I don't know whether it's Monday, Tuesday, Wednesday, Thursday, but that is the expect. There's nothing at this stage of the game that suggests that shouldn't happen, and that's inside the New York Stock Exchange. If we take a look at the NASDAQ Composite, NASDAQ Composite, this is already making a run for its highs out here. It's in full-blown bullish mode as well. Its price oscillator above the zero line has come back, and it's tested it a couple different times. That's bullish action, not bearish action out there. Those are the bulls defending that territory. That says 48.14. is its next move. You're trading at 47.96. Is this thing going to peter out when it gets up to that level? Because that is basically the top of its consolidation. I don't know the answer to that, but you and I were going to pay attention to that. It is a possibility. If it's a possibility and it can't bust them up, it'll try to bust them to the downside. Likewise, if it does bust them up, you're looking at a potential move. If it can do it with any kind of volume, which we have not had any volume here to speak of. But remember, volume's only one aspect of trading and investing. I'll put that other chart back up on my screen out here for you. These are the kind of things that let me see if I actually got it here. I don't. So son of a gun. So I've got to open up something else. Let's open that up. Is that it? No, that wasn't it. Let's open this up. I'm on a different, let's try that one. Yeah, here you go. So from this slideshow from current slide. There you go. So when it comes to trading and investing, here's your trading pyramid. This is you got to take a look at look. You got to like pyramids, right? You got pyramids. They tell you, eat your fruits and vegetables and proteins and this and that and starches. And well, this is your trading pyramid out here. And when it comes to trading, you got to recognize that there's at least 4 different. It's like building a table out there. If you build a table with 2 legs, it's going to fall. If you build it with 3 legs, okay. If you build it with 4 legs and one of the legs doesn't work out there, guess what? That does pretty good chance that table's still going to be standing out here. Guess what? The market's got 4 legs too. And those 4 legs are defined as, or at least ZB defines them as supply and demand, which we'll call volume. And you can use any one of a number of different indicators out there. You can just use the straight out volume. You can use the money flow index. You can use on balance volume, but just become an expert at one of them. That takes care of about 25%. Sometimes it doesn't equal 25%. These 4 areas aren't necessarily equal. They're not equal in distribution with regard to the influence. Remember, influencing, the most important skill that you and I can have in life. It absolutely is out there, the most important skill. If you're going to teach anybody anything, teach them how to influence. If you want to give a good presentation, then make sure that you sign up for that workshop. Just copy what it is I do. Just emulate that. Maybe you don't even trade invest. You just like listening to the show. Maybe just like listening to the energy that I have out there. Maybe you've got to give a presentation at some point in time. Let me tell you, copy my presentations. It will improve. The best compliment I got was I did a workshop on behalf of TFNN for the folks over at Ninja Trader a couple weeks ago. And they give workshops all of the time. And the lead facilitator of that, he called me back and he said, look, Steve, I just want you to know this. I sit through all of these presentations. And I can tell you that I always get off track. Very rarely do I watch a full presentation out there. I don't know if he was supposed to share that with me, but he did. He said, your presentation, I couldn't take my eyes off the screen. I listened to everything you talked about. I watched every single screen out there. There's a reason. There's a flow. And anyway, let's get back to the trading pyramid. Momentum. Momentum is an important aspect of trading. You can use your stochastics. You can use the RSI, the relative strength indicator. You can use Williams percentage R. You don't need to use all of them. You just need to use one. For volatility and liquidity, I'm going to be talking about volatility tonight, right? You want to understand that. Hey, Bollinger Bands are a great tool for understanding volatility out there in the marketplace. Standard deviations, like Daryl Martin teaches, that's another great tool for being able to understand volatility. And then you got the energy. You got the angle. You got that power law vector indicator. No better tool than in the art of timing the trade charts out there. There's others that you can use. You can use the MACD. Basil Chapman, he's the expert when it comes to the MACD. He's using that to be able to evaluate the energy and angle. So don't forget, even though the markets have been moving higher with light volume, it only represents one aspect of tools that you need for trading and investing. And this stage, this part of the game here, when we take a look at the NASDAQ composite, the bulls, the buyers are in control. They just simply are when you take a look at its tools. And if we go over, we take a look at the Dow, the Dow whatever I was going to say out there. The Dow here broke above that descending price channel. Yeah, it's pulling back just a bit today. Price oscillator above zero. It is still, at this stage of the game, it's still the bulls. It's still the buyers in control of the Dow. And if we go take a look at the VIX index, which we're going to be focusing on tonight during the workshop from 5:30 to 6:30. Hey, if you haven't, and it may not even go to 6:30. I'm going to give you the information that you need to know, actionable information that you'll be able to use for the rest of your trading career. You'll be able to use things. You'll be able to feel like you're a soothsayer. You'll see the market careening down, and you'll be able to say to your buddies or your spouse or whoever it might be or your fellow trader out there, not so fast. You'll be able to say, not so fast out there. Right now, you got the VIX index trading below the 50-day exponential moving average. That, too, is bullish out there. That's what's going on, is the general view of the markets. Now, let's go take a look at some things moving here to the upside, to the downside. Let's go take a look at WellCare Health Plans, WCG. Is the ticker symbol. This thing is having a nice day. Are they out with numbers? Looks like they are. Net income is $7.7 million. I don't know what that's going against, but must be going against something less. No, it says WellCare's fourth quarter profit plunges. It's plunging. Well, the stock is not plunging. This thing is up. It's got some nice volume. This thing doesn't have much volume on an average day out here. 6,000 shares were traded on February the 10th. So far today, 160,000 shares. What a illiquid stock this thing is here. Nonetheless, it's having a heck of a nice day for an $80 stock out there. That is on the WellCare health plans. Let's take a look at moving to the downside. Well, let's go take a look at Pier 1. We got to look at Pier 1. It's off 31% this morning, down five buckaroonies. Oh man, this thing looks pretty ugly. I haven't taken a look at Pier 1 out here, but this thing fell off of the pier. It looks like it was a tsunami that came in, and this is the 30-minute chart. Maybe we're looking at the 30-minute chart on the other one. Well, let's take a look at the daily chart. Let's get to it. Oh, that looks horrible. Talk about an island top. Talk about people being trapped like rats. This is Steve Rhodes. This is TFNN. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks. Dow's off 60 points right now. S&P down 2. Let's go out to Framingham, Massachusetts. To probably snow-covered Framingham, Massachusetts. To Charlie. Charlie, how you doing this morning?
Snow-covered. Is that what we call this?
Pretty intense. Pretty amazing. How much snow do you have in front of your house? What did you get up there?
It's probably up to my. I'd say up to my waist. I tried to walk around to the back of my house to shovel off the deck, and it's pretty pretty tough going.
Yeah.
Short distance too, not a big distance, but we'll make it through it. We're tough up here in New England.
Hey, makes for great postcards.
Certainly.
Huh?
Certainly.
Yeah,
we got a little...
you realize how many folks have gone out with their family, and that there's going to be this 2015 holiday card that they send out to people. It should be. You're not going to get a backdrop like that.
Yeah, but you're not going to see many snowmen because it's not a sticky snow at the top. But yeah, it's cool. Anyway, I'm in a profit on this BLDP. It popped huge today,
yes.
And my inclination is I'm up 30%, sell it, but I'm not sure that's a good thing to do. They got a contract with VW. That's the reason why it popped.
Yeah, so I saw that. So it looks like they sold some intellectual property to Volkswagen for $80 million or so. I would be inclined to take my profits on this $2 stock as well because, in this case here, so the deal with VW is done. If I don't know what the you might want to go back and take a look at the contract. But I doubt that I don't know if that has to really be posted in the SEC right away. So you may not be able to take a look at that. I think you go at least with you do one of a couple things. You either take your profits or maybe you at least get your principal off the table. And let it run. What I can tell you that's a nice technical setup on this is that it does have a high volume high from March 11th. Even though it sold off there, you've got volume at the highs, and there were 75 million shares. I don't know what took place, that day. That happens to be its all-time high as well. Maybe you go back and take a look at, that. What that means is that price could easily get to 501 to anywhere between 501 to up to $8.38. But I would just stick with the present, and you've got a nice profit in it. And I say there's no reason for you to at least leave any of your principal on the table.
Right. I think that's a good idea.
You can at least have a free trade, to let it run. Is there IP? Is this the only IP that they have? And they just sold this to VW in order to get 80 million. I don't know what their balance sheet looks like. That their balance sheet suggests that they needed the cash, they had to sell, or they were going out of business. I don't know any of that. This is where I'd almost get involved with the fundamentals to try to make a decision, like you're trying to, you're trying to come through. Like you're trying to come up with, because it may have more to do with that than anything else.
Yeah, I think taking the money off, at least for the initial investment, taking that off and letting it ride and putting in a stop, maybe that's the best way to do it.
Yeah, and then just spend a little time, try to do some more research on it to understand, this could. What else they might have to sell, or how they're going to use that 80 million. If you go take a look at their management discussion and analysis, their MD&A, it'll give you a pretty good feel for what they're trying to accomplish out there, and that might help you. So just go to sec.gov. Okay. Just go to sec.gov. You can find out what Ballard Power Systems is trying to do. Hey, thanks so much for calling, Charlie. Have a great Wednesday. Folks, that's it for the first hour of the show. Stay tuned because hour 2 of the Trader's Edge is up next. If you're off to start your day, have a wonderful Wednesday. Hey, don't forget tonight's workshop. Look forward to seeing you there at 5:30. Have a great day, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You're watching Tiger TV.